Okay, there we go. I think.
Anyway, Moxima, great having you on board, man. I really appreciate
You are.
I really appreciate you coming and joining us and chatting to our guys. We're about 18 of us here on the meeting, but we're not going to ask you to share your photograph with us. Uh, and
Okay, yes.
you asked me nicely earlier on. But what I'm going to do, Moxima, is I'm going to ask you. I'm going to basically make you presenter, which will mean that they will be able to see your screen, not you,
Okay.
but your screen. And I want you to just I want people just tell me whether they can see your screen. Um, so
It's
what you will need
just
to
give
do
me
is
one.
just allow us to see your screen as you did earlier.
Okay. Can you see it?
Not yet.
Okay.
Did you agree to share the screen? I think there's a
Yes. I think there's a delay of some sort,
possibly, yeah.
but I did agree to share
Oh,
the
there we
screen.
go. There we go.
I can see it. Yeah.
Okay, there we go. Okay, it's come a little bit later on. Yeah, there we go. Thanks. Okay, so I think what we can do, Moshima, I don't know if you want to tell the guys just a little bit about yourself. I've told them that you've done work for Standard Bank, you've been on TV and all of those type of things. Um, but do you want to sort of
Yeah.
give just a brief sort of where you're at in this particular game?
Okay, doke. Okay, so my trading expertise are, I'm still brushing up on those because when we used to trade as an analyst in Standard Bank, we couldn't really trade, vigorously because of compliance reasons. But with my analysis, I've been doing this. This would be my 14th year of doing technical analysis. So this is all I know, and this is all I've mastered, which I'm still trying to master. So that's about it with me. I think you've done most of the introduction, but that is just a bit of my background in terms of technical analysis.
Okay, so you worked for Standard Bank as a technical analyst.
Yes, I worked for Standard Bank doing the online share part. So I would do the recommendations. And now I work for a different bank and I do currencies and a bit of recommendations and just also sending stuff to private clients. And I also write for FinWeek on a bi-weekly basis. So this is on, when shares report, and I think what I wrote on was on PPC and high prop, as well as, that's what I wrote on. And it's just when they report, I don't usually do that when I look at my analysis, but I compare both the fundamentals and the technicals and try and see if they do match. Because in some cases, there are instances where the financials look exquisite, quite enticing, but the technicals are saying something different. So I kind of point that out if a trend is exhausted despite the good results, or the results are not so good. It looks like momentum is picking up. So I kind of pointed out in my articles in the FinWeek.
Yeah, yeah. Okay, and you're still writing for FinWeek?
Yes, all right.
Okay, fantastic, man. Anyway, I really feel
Yeah.
privileged that we've got you joining us here.
Oh no,
Yeah,
I feel privileged.
yeah, Moshima's started using the Pro Trader platform, and you enjoying it so far, hey?
Yeah, I'm enjoying it. I'm a bit annoyed with myself because which is a technical analysis rule 101, not to enter when the downside or the rally has happened. So I don't know what I did, what made me feel I should get into the market. So I made I'm at a bit of a loss, but I'm making money on the rand, so it's kind of evening out. But I'm finding it quite user friendly actually, and quite enjoyable. You just end up looking at your phone and laptop. You become a bit antisocial, but it's fine. As long as I'm making the money.
Yeah. Okay. Fantastic.
Yeah.
Okay, Moshima. So what I'm going to do is I'm going to ask the people on the thing. I said, they in the meeting. I've said to them that they could possibly ask you to have a look at some companies and so on, and just
Yeah.
about and possibly do a bit of analysis. I know that quite a few of our clients on here are people that are longer term investors as well, and they might want to, because you've done a lot of longer term stuff. Eh? That's what you've been really concentrating on. Is that right?
Yeah, I can. Well, I do all terms. But longer term, yeah, that was my first point of just that's the first part I look at before I start analyzing the stock up to the nearer term. So I'd look more at the monthly chart and weekly chart for longer term investors.
Okay. Okay.
Yeah.
So I just want to ask if there are any people in our group who want to ask Moshima something. Janine?
Yes, yes, I would love to. Hello, Moshima. My name is Janine. Hi.
Sure. Hi, Janine.
Thank you for joining tonight. That's very exciting.
No.
I've only been trading since the beginning of the year, and enjoying it tremendously.
Great.
Obviously, I have a lot to learn. And my first question that is popping up here is, when it comes to trading, at this point in time, in your opinion, short-term trading, would you recommend to first get into Forex or indices or equity CFDs?
I would strongly suggest CFDs, equities, because or you could just get into equities in general. At the point when you're starting off, because of how rapid and because of the volatility in the market, it becomes difficult if you're starting off to actually grasp sentiment at first. And if you're looking at something as erratic with its movement, like the rand or particularly currencies, you'll find it not enjoyable to trade because you'd be making a lot of the losses. So it's better to actually just start off with something that's very gradual. So I find CFDs do make you the money, and once you get in at a certain level and you're not hit by your stop loss, you're more relaxed than having to do something like Forex. If you start off with Forex immediately, it will kind of put you off trading. So what I would suggest is you practice on a demo using Forex, but in terms of wanting to make your money and at a steady pace, that doesn't require, if you're not one that sits on the screen watching the screen the whole time, CFDs will probably work better.
Okay, that's fantastic. Thank you very much. And can you maybe have a look at Sanlam CFD and give an opinion on where you think that is going?
Okay, so you know what I should have done? I should have I'm using the meta stock at this point. Ross, if I use the meta stock, you would still be, everything, the levels are still the same on a CFD platform, right? Ross?
I was mute for a moment. Yeah. Absolutely, they are exactly the same. Not a problem using the meta stock. You've got this is end of day. Hey, your meta stock.
Yeah, this is end of day. I should have probably logged on to. Well, I suppose I'll do it next time. It's just I haven't really drawn on those charts, and my charts here could look a bit scary because I've saved them on a little dongle which is not here. It's in the car. But I can redraw some of the lines. Yeah. Okay, so if we're looking at, can you see this chart that's pulled up now?
Yes, I can see it.
Yes.
Can you see the chart? Okay.
Yes.
So what I'm going to do generally is probably if I just draw the lines, it will make sense to you as well. You could follow through with what's happening with Sanlam. Okay, so Sanlam at this point, Hmm. Let me just give me a sec to draw all of these
Now, this is a daily chart.
lines. No, this is a monthly. So what I tend to do is look at it, what it's doing on the monthly chart. And from the monthly chart, you can then, it will guide you, give you a general outlook. And then you'll be able to then tell what will happen in the weekly and the daily, or rather have a guideline of some sort. So the reason why I've started off with the, are you a, CFD, so you're more of a short-term trader. Okay. So what it's doing on the monthly chart, it's kind of consolidating on the upside, which means you'll find a lot of volatility with the CFD because it will have to either break the upper or the lower slope for any type of direction. What's giving me a bit of hope that it could probably break on the upside is that the monthly RSI seems to be ticking up. But another thing that you need to keep note of is it has been in negative divergence since 2012. So this explains a lot of the volatility that's coming up. And until such time that this RSI is breached or breaches that trend line, could we then see upside to the all-time high, which is around 82, 82.20. Okay, so if we look at it on a daily chart, so the reason why I kind of started off with the monthly is so that you understand what the general or the overall sentiment is. And it is in a consolidatory mode, but on the upside. So it means you should anticipate a lot of volatility within your CFD. So let me just, I just want to go on to the daily chart now. Wait, I've got a, yes, so Sanlam Daily.
Can I ask Valelam to just mute your mic, please, Valelam?
Okay. So looking at the daily chart here, there has been a positive breakout from this type of, if you just look at this part, shows a very, that's the consolidation that's on the monthly chart. There's no distinct direction upwards or downwards. It's just been quite volatile. But what the daily chart is showing here is from the lows that it was forming, it's actually broken out of its bear trend that had been forming since March. And that was confirmed above, let's just say 70 Rand. So you should be in a long position. You should be at a long position from 70 Rand, with potential upside to about 75, 85, and then I would think up to the all-time high there, which is at 82.20. But you're seeing the RSI come off that mega overbought position. But I think it will actually hold. It will retain this bullish momentum, which means if it reverses above 70, then you're still in good. It's would have formed another rising top, and your upside momentum will most likely then go through 73, 75, up to 82.20. So I would suggest you stay long at any level. Excuse me, my MetaStock tends to do this. I don't know why, but I would suggest you stay long at any level above 70, with potential gains to 75 at first, 75, 85, and then you would increase your positioning or put another lot or whatever at 75, above 76, let's say, up to 82.20. At this point, I would suggest you put your stop loss anywhere between 70 and 80, 68, 60, because in that case, it would mean it's a false break and it would then return back into the bear trend. So stay long at that point, and any reversal above 70 would be a good sign. It then would, increase the chances of Sanlam going to 75, 85, and then 82.20. I don't know if I'm making sense.
Yes, that sounds great. And I'm so glad that I am in a long position in that one at the moment. So fantastic. Thank you so much.
Okay. Yeah. Okay.
Moxima, if a person is considering it right now, would you say just for the long term? Because I mean, it looks like it's going down right now as we speak. So what would you say if somebody is not in
Yeah. So
but wants to consider getting into a position, what would you suggest?
okay. So if you look at it at this, so just flip back to the monthly chart. Okay, yeah. So this consolidation is happening directly after this correction, if you can see. And this correction happened because it traded on the final phase of its bull trend. And usually when that happens, it's 1, 2, 3. Usually when that happens, a correction like this is inevitable. So I'm kind of glad it did correct, and it's consolidating on the upside, which means it's still trying to find its feet after correcting as much as that, which is quite a huge correction. This was from 82.20 all the way to 44. That is a humongous correction. So I'm not surprised that it's actually consolidating on the upside, and it's actually good that it's consolidating on the upside. The only thing that will remove it completely from just this oscillation that it's doing here is if the RSI then eventually breaks into overbought territory. Now remember that if it breaks out into overbought territory on the monthly chart, it just emphasizes that it's now in a bull trend. It doesn't mean it will break out, because it could stay in overbought territory for years on a monthly chart. So I would suggest you wait at this point, and I think your more substantial buying level would actually be when it breaches that its all-time high, because then RSI would be on bullish territory. And if you calculate how much you would then make from that, if you give me a sec, I just need to find a calculator. Minus 44 plus, so from that breakout at 82.20, you could then see that long-term upside to 120.
Okay.
Which is not a bad return. That is, let me just I just want to 4.5 divided by, which is a 50% gain. But it's quite important that you only in the long term then go long at 82.20, because another thing that could possibly happen is that it could hold at 82.20 and then pull back again. So it's best to rather do it when it breaches 82.20 and the RSI breaks out of this bear trend. And in that case, that's all systems grow. You have your indicator giving you a bullish, a bullish signal, as well as your price chart. So if you on the long term, you'd want to go aggressively long above 82.20. If you're holding CFDs, you'd be long for the near term at any level above 70 rand, and then you'd revise your position at 82.20 in case it fails to break through that level. So you'd make that your target if you've got a CFD at 82.20.
Okay. I've been asked.
And then and if it does break through 82.20 as a CFD, you'd stay long, and for long-term traders, it would be a good position to actually just go aggressively.
Okay. Tell me, I've just been asked the question: how do you calculate your target of 120, Moxima?
Okay, so it's based on the high and where it actually ended. So it would be at that 82.20. I've just rounded it off up to where it actually the low there, which is at 44.5. Okay. And then you base it from the target there upwards.
Okay.
Yeah.
You wouldn't put a fib, because that would be support and resistance. You wouldn't put a fib between the support and resistance to show you where it'll go.
Okay, so it's different strokes for different folks. I don't necessarily first, when it comes to Fibonacci, I only use Fibonacci when it hasn't formed a pattern. and it just seems to be forming new highs. But if it is if it has formed a pattern or a certain breakout, I prefer looking at the target, because then it gives me a long-term outlook as to where it will go before the fib actually tells me. So what you do is look at the fib if you're looking for any retracement.
That your 82 is your resistance, and that 45 is your support. Is that correct?
Sorry, you broke there. So the 82 would be
so
my
what
resistance.
You have to measure that. Do a measurement there. Measure
so
that.
82 up to the 44.05, which is the low, that low point there.
So if you measure that, then in theory, if you measure that, and it should go the same distance above the 82.
Yes.
Am I correct?
Yes, correct. So we do one of those from there upwards to 120. And because it has corrected, you'd then see a new, this would be a completely new bull phase, and new bull phases are quite, it's quite nice to catch it as it starts.
And you reckon the bull phase will start when it breaks through that top, yeah. Okay.
Yeah, 82. The reason why I wouldn't really say go long in the long term at this point is because this RSI is quite concerning. If it could then reach there, fail again, and trigger some more downside, which would then make it a fail break. And you don't want to be caught in a bull trap like that. So you really want to go in when the RSI has also confirmed a breakout above 82. So you need to just, if you can, on your charts, draw this trend line so it can give you a double confirmation that it's officially in a new bull phase.
Okay.
Yeah.
Moxima, what period do you use for your RSI?
So I use 3. It's 3. I find 3 just over the years I found it more useful. It's just if you go any further or you go 14, I just feel like it doesn't give you the correct times when it's going to correct in a trend. And I think if you're really starting off, it's best to just use 3, because the 14, inevitably most people who use 14 tend to default back to 3 to just make sure that the 14 is still in order. So I would just, I suggest you use 3, which will then automate to 3 weeks and 3 months and 3 day, and
Okay. And are you using the simple average?
Yes, simple. I actually don't use any moving average. I just use the simple RSI, and the average would just, are you talking about the moving average rather?
I'm talking about the, on ProTrader, we've actually got 2 values. We've got the RSI period and then the RSI method, simple or exponential, and then period of moving average.
Yes, I would use the 3. It's a simple one.
Okay.
Yeah.
Thank you.
You're welcome.
Moxima, this is Neil.
Hi, Neil.
Moxima, if you could comment, please, for me on Woolies. I'm holding Woolies long term. I've taken a bit of a knock on Woolies. And what would you suggest I do now? That's number 1. And number 2, could you comment on RSI versus stochastic, the few pros and cons of both of those? Thank you.
Okay. There are really not so many cons about, they basically, I'll just go to stochastics and RSI. They basically work in the same way. I just find stochastics, I like keeping things very simple. I find there's a bit of, stochastic needs a bit more confirmation, which could complicate a breakout. I find RSI a bit more simple in terms of if you draw your trend lines. I think it works out better in most cases than the stochastics. But that's when you see, I draw a lot of my trend lines on my RSI, and in that way it keeps it clean, and I'm able to see breakouts or confirmations better than a stochastic. Stochastics, you need you need those divergences and all of that. And with when you draw the trend lines, you just find it a bit more clean and more crisp to actually just see that a breakout. I don't know if I'm answering your. They work
Yes.
the same in terms of giving you overbought and oversold.
Thank you. That's
triggers.
Good. Thank you.
Okay. So this is the monthly chart at this point. The only thing about, Woolies is a bit, it's inevitably in a bear trend, and it's done that because it was correcting, and it seems like the correction is still continuing. What I do notice is it's starting, its RSI is trading in a triangle, which means there is going to be a bit of volatility, but it seems it's kind of lingering on this trend line, which is dated back to 2012. And the only time I would really start to get concerned about it breaking through that trend line and possibly confirming a kind of like a head, it could be a head show. It would probably form a shoulder, yet this being the head is, and if it doesn't form, if it just, if it breaches that trend line and starts trading up below 54.85, I'd be a bit concerned, because then we could see it actually pull back even further. So there's kind of a lot of momentum that has to pick up for me to be bullish on Woolworths. In this case, because it's held a few times at 85. Sorry, I'm a bit dyslexic at this moment. At 58, 55. I would, if it continues to hold there, then that's a good sign. But if it doesn't, it could then breach that 54.85 level, and that would put you even deeper in losses. So just at this case, if you're taking the knocking, just hold on and really completely get out of it if it's at 50, if it trades through 54.85. The reason why I'm saying hold on, because you've already taken the knocking, is because it also seems like on the weekly chart and the daily chart that 58.55 and 54.85 level seem to be buying levels for some new entries. So if there's more buyers coming in, this could then push Woolworths up. But at this point, you need to keep the 54.85 level in your mind, written everywhere, because below that, then that would then start another bear run. But if it continues to trade above that level, then there is a chance that there's buying coming in at that level that will push Woolworths upwards. So hold. If you're at a loss, just continue holding it, because you're now at this point you're stuck between a rock and a hard place, because if it continues to hold at 54.85, then definitely buyers will start sniffing that and they will come in and they'll push it back up. But unless there's no more strength, because they've already, I think they did their results soon. They did produce, or at least report them. I think it was last week or sometime, or they're going to do it soon. That should determine a lot, but I still think you should keep that 54.85 level in mind. If it continues to trade above that, then you're in good territory. But below that, you'd want to at least, exit your position.
Yeah, I think.
Thank you very much.
Moxima, they have had their results out, and they were not good.
Okay, that talks. But another thing is, you need to be aware that Woolworths has. It's one of the in the retail. The reason why I'm saying hold on is because it has taken a knocking quite a lot, and I get the feeling that this is probably the last leg of its bear trend, and it holding at 54.85 would be a good sign, because it's held there a couple of times, if you can see where I'm pointing. Yes. So it seems to be a buying level for investors. If you are taking a knocking, really, I wouldn't say exit the position, because you're already in a knocking. Rather just stay in and wait for it to recover. And out of all the retailers, at this point, Woolworths does look cheaper than most of your retail stocks. So I get the feeling there'll be a switch out of ones that are not, that have run too hard, into something that's cheaper like a Woolworths. So I feel that there will be a switch of some sort. But if there isn't, and there's just constant pessimism about it, you'd really want to get out below 54.85.
Thank you.
So the idea
Okay, you're welcome.
to hold them, Moxima, hold them, but if it breaches that 54.85, then just
Hold them.
Yeah.
Exit, yeah. Because then that's breached a trend line that would have, like it's already on that trend line, and below that level would have confirmed a negative breakout of a trend line that's held since 2012. That's a very big deal. And also breached support that's held since 2012. Downside from there could be quite rapid. So, yeah, just hold it at this point. There's really no point selling it if you're taking the knocking. You'll take just a little bit more of the knocking, but as long as it's holding above 54.85, you're in good space.
Yeah, because it has actually breached that line going upwards that it was touching a couple of times in 2012, 13, and 14. The last 2 months or 3 months, is it? Yeah, the last 3 months, it's actually breached that level. So the possibility is.
Yeah, and what's making me feel like they'll probably be is the RSI is forming these rising bottoms, which means it's a positive divergence, which means there are people who are nibbling into it. So most asset managers at this price, this looks good for them. It's cheaper than most of the retail stocks, so I'd suggest you hold.
Okay, I'm asked the question, would you go short below 54.85?
Yes, definitely. Because it would mean that the RSI is still bearish, and it would mean it's breached support from years back, which is a big deal. That's no small fry. It's not something that's been holding. That's almost, that's a couple of years back. And usually when that happens, there's that psychological thing of them jumping ship, when it's breached something that's held on for so long.
Okay. I'm asked the question as well. Thanks, Moxima. I've asked the question as well. How important are candlesticks in technical analysis?
How important are candlesticks?
Yeah. You use
is that the
yeah. You're not using candles in there because you're looking at much longer term periods.
Okay.
Yeah.
So I actually do use a lot of the candlesticks. The bars, candlesticks are just a more sophisticated representation of the bars. I really would, I use them both, but in terms of having to, because candlesticks, if I just go back to this, they give you a more, they more visual in terms of knowing downside or upside. And they absolutely, out of everything, if you never had to follow patterns, but just analyze a candlestick itself, it tells you a lot about whether there are buyers coming in and sellers, and whether, buying momentum is starting to phase. So the importance is actually, I can't stress how important it is to use candlesticks and bars, because it tells you the aggressiveness of the market, or the share, or the selling, or the buying, which gives you an idea of where you should be at this point. If I had to change this into candlesticks, it does seem like a lot of them apply with Woolies. If I had to analyze this candlestick in particular for this month, it seems as if, although there was some buying that came in, sellers came through, it does look very news related, because there was a doji. So this doji kind of meant that the downside was starting to fizzle, but now there is a bit of selling that came through, but it's still, there's still support that's held. So So although they are buyers in this case, sellers in this case, I do think that next month we'll probably see a different candle, for the mere fact, if this at least closes, if the next candle opens on a bullish note, then that would be a very good sign, which means that's actually next week. So next week's candle for long-term investors will be quite important. If it opens on a bullish note, then that would be a good sign, and it will tell you that, you know, this was based on just news, but sentiment still remains, you know, it's still finding these levels cheap. So that's what I would read in candles. You read a lot in candles, and that's why I particularly love them.
Okay. Okay.
Yeah.
Just a quick question. I see these candlesticks are slightly different. Some are thin, some are fat. Are they a different version of candlesticks?
Okay, I'm also finding something. That's what I was actually looking at. I think it's because I kind of, but you mean the length or the width or the length?
No, I'm talking about the actual width. I know there is a version of candlesticks that the width of the candlestick indicates something to do with volume.
Yes, I'm just looking at this as well. I think this particular, I don't know how it converted to that, but yes, with some of it, if they are thicker, wide as this as compared to that, it means there was some volume. You know, the downside was complemented with, or rather, you know, followed through with a lot of volume, and that is just to show, you know, I've just emphasized that when support is held and is breached, this is the type of momentum you'll get. As you can see at 76.60, it held for some time, and when it did break through, there's that gush of selling, or that, you know, that sell-off that happens, and that's what I'm worried about. If it happens below 50, 45, you'll have something similar to that. That's why I would say you'd sell below there. But I think it would hold. And if you're looking at these, because I think these candles have been automated to follow with the volume, this would ensure that volume is kind of average, like most of the charts. So that itself is saying that it's downside on very thin volume, which means support is likely to hold.
I asked the lady to look at Kumba for us, please.
Okay.
I've also been asked if you could give your opinion on Telkom, TKG, after this one.
Okay. All right. Okay, so Kumba, I remember very well when I called it a sell at 380 and I calculated its downside. It was exactly this, but it just sounded so drastic, saying it would go all the way down there. And that was the reason, because of it topping out. But what's happened at this point is that it has now broken out of its bear trend, which is a very, very good sign. No, so it's delete that now. So what the monthly chart is saying is it's formed a higher low. It's broken out of its bear trend, and you should actually go long. You should be long of Kumba, and I'll show you better on the daily chart. Excuse me. So okay, let me just show you on another one that's just less, on a weekly maybe, less, that's got less. So with Kumba, there's just okay. This RSI is showing that they're rising, so there is buying momentum that's coming through. It did break out of its, you know, after breaking out of this entire bear trend, it is on bullish mode. It broke out of its bull trend, but held at 139. So what I'm seeing now, if you draw that, is that there is an inverted head and shoulders that's forming, but also potential double top. So I would strongly suggest that you actually only go long. If you want another buying opportunity, it would be above 231.30. Above that, it would then return into this bull trend, and we can then see it go all the way back to at least 383.50. Because this was just a mere correction. In most bull trends, you need a correction, also known as a breather, before it resumes. But at this point, I would suggest that you only go long above, let's say 232 to be safe, because at that point it would then return into its bull trend, and we can then see it, go to its prior highs. The reason why I say that, because there's also a danger of it encountering resistance, because it's encountered resistance there quite a few times. And if it does again, and you're already long, you might then, you might suffer the consequences of a loss back to 139. So the only safest time to actually go long would be above 231.30 or 232, and with that upside to 285, 323, and then 385. So yeah, just watch out for that, because if it doesn't go through that level, then there is downside back. There's potential downside back to the 139, and if it does break through that, a double top would be confirmed, and we could see going to 63. My bets are more on it breaking through the 232 level.
Thank you.
Okay. I mean, if you're long already, that would be also a nice time, a nice level to increase your position. Let's look at Telkom. Okay, so Telkom, bit of a consolidation. Ross, are you there?
Yeah.
Oh,
Yeah.
oh okay. No, just went all quiet.
I'm finding
okay,
this.
so there's a bit of a consolidation.
I'm finding this fascinating, actually.
Is it? So a bit of a consolidation, but within the consolidation, there are those rising there. But yet again, okay. I actually did write something on Telkom at some point, and I had put something called, I had said I'm cautiously bullish on it, and it was because it was going towards, its all-time high, well, not all-time high, one of its prior highs, and it's kind of reversed and is now, excuse me, I don't need to start, keeps doing this, especially at this time of the day. Okay, so what it's doing at this point is trading on a very key support trend line. I just want to see the level. So it's on this key support trend line. It's held since at least the beginning, since, well, 2016, first quarter or second quarter, which makes it quite significant. And it's teetering on there. So one of two things can happen. It could either bounce, and like it has done, and regain upside, which would make a good buying level at either that high, which is at 68.85. So above 68.85, you can then see it go back to 85. But it needs to at least go above that prior high and shoot back up. But if it goes anything below 59.20, we could actually see it retrace all the way back to 49, possibly hold or even breach it. And it's in a huge consolidation on a sideways, in the sideways pattern. The RSI is not looking too promising, but I would say, okay, are you asking to go long or short of Telkom?
I was just asked what your take is. Maybe Dolat, you could just unmute your mic and just ask the question. You thinking of going long?
Hi, Rossi. I was considering going long based on that like 60 rand support level, but I was confused because it's been going hectically down the past couple of days.
Yeah, I would strongly suggest that you would put your mark, I would say above 68, 85 or 70, because that, if the next candle should reach the prior high to give us a bull sign, and if the candle then trades above that, it would mean it's bounced on, or it has respected that trend line once again, meaning it will then extend that upside back to 85, which also would then increase the chances of it breaching that 85 and get it to even higher levels. But I would suggest you hold at this point, because if it does go below 59.20, then it means that it would have breached that trend line, and we could see even steeper downside to 49. So hold your buying level, a more secure buying level that should then encourage further buying, would be at that 68.85 mark. At this point, it's very topsy-turvy, and when it's on the support trend line, there's a lot of, a tug of war that could happen between buyers and sellers, and it will be who's giving in. And if buyers are not enough and that 59 level gives in, then sellers will just literally, it will be a bloodbath towards 49, and you don't want to be caught in that. So rather wait. And the beauty about trading is when patience is virtue. If you really go at the breakout levels, it's more secure than having to doubt or just go at any entry. At this point, you'll see there's going to be a tug of war which will frustrate you, and you'll be hoping the whole time that it's going up. But above 68.85, it's more of a secure level that should see it then head back up to 85. So just hold at this point.
Okay, thanks a lot. Thanks a lot.
Okay, you're welcome.
Thanks, Moxima, for that. I just want to ask a question here. When breaking out of a pattern, that's a triangle, parallel line, etc., do you enter the day after the breakout, or do you wait for a test back to the support before entering? Also, how do you adjust your stop loss? Say if you go long, do you adjust each day, or when you approach your targets, or do you adjust, say, 2 candles before, for example?
Okay, okay, let's just say today it closes above that 68.85 mark. It's what happens with breakouts is you need the close to confirm the breakout and not the intraday. So you would then go long the following day. But in going long, you also need to make sure that your RSI is not overbought, because if it is, then it could also be a false break. So it's best to go long when your RSI is not overbought. But you also need to keep in mind that there is a tendency for it to do a return move. So what you would do is you'd either make your stop loss the next, the previous candle's high, or whatever percentage that you're comfortable with, if it's a 5% or 8%. But you would at first, so that you're not in a bull trap or anything where it does break out and all of a sudden it pulls back. So in your initial breakout, you would do it on the close. If it's closed above that level, you'd go long the next day if your RSI is not overbought. If it is, you'd wait for your RSI to pull back and then go through that level again. And then you immediately put your stop loss at the prior, the prior candle. So I don't know if you can see this, you'd put your stop loss where that high is.
Yeah.
So it's your candle before the breakout high on that, so that you're not caught in any false breaks. So once it's then risen substantially above that, you would then do your trailing stop loss of whatever 5%, or but that your initial part, you just need to put it a candle, the previous candle's higher, high, so that at least you're protected from any bull traps that are out there. Yeah.
Okay.
So long and short, you go long the day after the once your close is confirmed. So if it's at 86, 85, it would be the next day. It would be the next day, and provided that your RSI is not overbought, and then you would put your stop loss on the previous candles wick, that high, the wick of your high of the previous candle.
Okay.
Yeah.
Carl, I don't know if that helps you there.
Yes, it does. Thanks a lot.
Okay.
Okay.
Thank you.
Could maybe I might do one like the DAX.
Yeah. I've also been asked for Stanlib. Stanlib.
Stanlib. What's the ticker for Stanlib? Is it SBK?
Yeah, I would.
No, that's Standard Bank.
Yeah, I was asked that. You're talking about Standard Bank, Shannon?
I don't think Stanlib is listed.
Standard Bank.
Yeah, Standard Bank. Yeah.
Okay. Okay. It's just pulling up now. Okay, so Standard Bank is doing, okay, so if I have to remove that, and we have to, there is a potential inverted head and shoulders that's kind of forming, but I'm just trying to look for the neckline. But inevitably, I would say kind of look out for that 177 mark, because I've noticed that when stocks start heading to the all-time highs, they do tend to reverse a little or hesitate, and there's potential for a double top to form. So if you're long, you'd want to start possibly revising your position at 177, just to protect yourself from any risk of it pulling back, because there's a tendency, like if you saw with the TKG, that when it gets towards its high, it tends to pull back a little. So just revise your position at 177, but if it does break through that 177 level, then we could see it head to even higher highs. I just want to calculate. And then you go to the low there, which is at, okay, it's 82. Okay, 82. Which would go up another 50%, so it would be plus 82. So that could go close to 260. So, but just, you would stay long above 177, but also just make sure when you test there that you revise and you keep your stop losses in order in case it just fails to break through and starts doing a topping out, a double top situation. But stay long if you're long, and just revise your position at 177. If it's failing to break through 177, then 163 would be your stop loss mark, or if the next candle is lower at 177, then you'd want to really close the position and probably just re-enter again when the all-time high is breached, just in case it doesn't, it fails to breach that all-time high.
Thank you, Moxima.
Perfect.
You're welcome.
Okay, there are a couple more. Valelam, you were asking about the DAX.
DAX. You know what? I have a problem with my. Can I rather send you that chart? Yeah, there's a little bug on my Metastock with my international indices, so I use something different. But I could I'm getting it sorted out. I could send you the chart at some point if you could just remind me, so you can forward it to. Yeah,
I'll do that. And then just another question. Somebody, Janine, is saying, if time permits, can we look at Break? And then while you're looking up Break, I'm asked by Stuart, any recommendations for books on charting and technical analysis?
Hello? Uh-oh.
Did you get that? Can you hear me?
Not very clearly. There seems to be a lot of static, and I think then
Okay,
yeah.
I think, Bram, if you would mute your mic there, Bram. Are you able to hear me now, Moxima?
Yes, I am.
Okay.
I can hear you.
Okay, I don't know if you got the question there. We want you to look at Brait if possible.
Did you say Brait? Okay, give me a sec.
And then also, while we're waiting for that, Stuart is just asking if you've got any recommendation for books on charting and technical analysis. Any ones that you can recommend?
On what side?
On charting and technical analysis. Any books?
Did you say books?
Yeah.
Besides yours, Ross, I would strongly recommend Murphy, because it's John Murphy. It's quite easy to follow, because it's also just very not elementary, but it's just user friendly, and it's easy to follow. For a first time, I would really recommend John Murphy. I mean, I think I still use mine as a Bible at this point, but that's his one. So it would be your book, and John Murphy.
John Murphy. Okay, what is his book called, or is he just written one? Do you know?
Let me see if I could just give me a sec. John Murphy. John Murphy. Okay. Yeah. I'm just trying to Google it on one side. Images. Okay, so Brait. I'm not too. I've always kind of been bearish on Brait. For these reasons. Oh, technical analysis. Technical. No. Okay, so this is the reason why I'm bearish on Brait. It's, as you can see with this, I had actually called Brait a short quite some time back. It was trading at 142.90. As she said, from there it will top out, which it has, and it's broken out of its long-term bull trend. And this is the return move that I talk about. That it's usually that impulsive move, but if it fails to return, it then pulls back even further. This is typically what Brait does. This is what a return move does. So I'm still bearish on it. The next level, I mean, if it breaks below 57.60, then that could see another aggressive pullback to about 44.80 and 34.10. I'm really bearish at this point, but if it holds at that level at 57.60, then that will be a good sign. But it would effectively have to trade above 72.30 to actually just get out of a bearish consolidation and back up to about, sorry, I think it's also a connection thing. That's why this major stock keeps doing this.
No problem.
So it would have to trade above 72.30. From there, it could go to 89.25. But effectively, to actually return back into that bull trend, it would have to trade above 101.20. It's still very far off. I'm not too happy with Brait, and I wouldn't suggest you go long. I wouldn't say these are cheap prices, because it just needs to do a bit more to convince. And with the RSI, yes, it is forming those rising bottoms, but there's no there's no strong momentum coming through. So my take is it will probably start consolidating at 59.20, between 59.20 and 72.30. But if it breaches 59.20, it could go to 34.10. And if it breaks above 72.30, we could see go to 89.25 and possibly back to 101. So just stay out, or if you're in it, hold. It's fallen, you've taken a knock. But if it trades below 59.20, I would strongly suggest you exit your position. Are you trying to go long or short?
Janine, are you short on Brait? Are you looking to go short or long?
No, unfortunately, I am long, and I'm sort of reaching my stop loss at 57.44.
Yeah, if it goes to that 59.20 level, which it has held a few times, then it will completely go through your stop loss. So just hold it until your stop loss hasn't, because it is also held there for since I suppose since June. That could also be you could breathe a sigh of relief, but you also need to keep in mind that if it does breach it, it could be a gush of downside. But if it holds, that means it's a buying level for most for the more advanced trader, and because of that you could push it to 72. So just hold. You're already taking that knocking. Just hold. Don't exit the position until you possibly stopped out, or if you want to just exit the position when it goes through 59.20.
Okay, I think it had gone below. I think it went to 58.40 or 20 or something like that. It went quite.
So the low there is at 57.60. So and you weren't stopped out?
No, this is monthly.
No, I was actually just not stopped out. I was chewing my nails. I was just not stopped out.
Okay, just hold. Sorry, I keep saying 59.20. It's actually 57. It's actually the low there is 57.60. So just hold. That because it's 1, 2, and then it went up, and then it held. Just hold. If you stopped out, you can get into something else. But at this point, there's no point getting out if it's holding at that's 56, a 57.60 level rather. Yeah.
Okay, and Brahm says that that book by John Murphy is technical analysis of the financial markets.
Oh, yes.
Yeah.
Of the financial markets, yeah.
Okay. Wow, Moxima, I could listen to you for another hour. You know that.
Well, I mean, if you're willing, I could do. I'll just check about next week, but if I'm available, I could help out again.
Yeah, no, we'd love to have you again, but we don't want to abuse your time too much. But man, thank you so much. Tell me, let me just ask if there are any other questions that any of you have for Moxima. She's committed in front of all of us that she'll do it again if we want to, which is wonderful. Thank you, Moxima. But this evening, if there are any more questions, let's just ask her, and then we're going to end the meeting. Anybody? Or got any comment? Or Martina? Okay, Martina just I'm interested in forex strategies, maybe for next time.
Yes, definitely, yes. Oh, I could see the messages on the side. Oh, thank you to everyone. Very insightful. Thank you. You're most welcome. I'm only saying I'm so not used to this new technology.
Yeah, no, it's fantastic. And next time I'm going to ask you to make yourself up and everything like that. Then we want to see what you look like. You see?
Yes, sure. I just look worse for wear at this point. So I don't want to traumatize you guys.
No, you won't traumatize us at all. But Moxima, Moxima is a very glamorous lady, and she's lovely. But anyway, okay, Moxima, thank you
Thanks,
so much.
Ross.
Yeah, thank you so much. We really do appreciate it. And there you can see people are saying,
yes, I can see you. Everyone's very welcome. Yes.
yeah. Anyway, no,
Interesting evening.
thanks so much.
Okay. Thank you, Ross. So just let me know when we can coordinate.
Sorry?
We'll just coordinate when the next time I do it.
Yes, yes. No, we were, we don't want you to feel that you have to come on often, but we would love to have you often because really, I must say, tonight was very insightful. Yeah, and
no, you're most welcome.
You certainly know your stuff, and we appreciate you coming on with us there. Okay, so
thanks to everyone. Yeah. Okay, for all the lovely messages. I can see them on the side.
Okay.
Okay.
Thanks, Moxima.
Thank you.
Bye so long.
Bye, bye, Ross. Bye, everyone.
Bye, everyone.
Bye.
Good night.
Bye. Thank you so much.
Thank you.
Pleasure.
Yeah.
Thanks, Ross.
Pleasure, guys and girls. We'll chat next week, Tuesday evening. All the best, hey? Bye so long. Bye, Moxima.
Bye-bye.